This video is brought to you by OKCoin Crypto Exchange, where you can buy, sell, and trade your favorite cryptocurrencies, and you don't have to pay high fees. OKCoin has very low fees, lower than many of the other crypto exchanges in the market. You can also stake your cryptocurrencies and keep 100% of the rewards. There are no fees. Other exchanges charge fees. OKCoin allows you to keep 100% of the rewards. Sign up with OKCoin, link in the description. Hi, everyone. Welcome back to the Thinking Crypto channel. With me today is Brian Quintenz, who recently resigned from the CFTC. Brian served as a commissioner under the Obama and Trump administration. Brian, great to be speaking with you.
Thanks, Tony. It's great to be with you and the Thinking Crypto community.
Yeah, I'm excited to speak with you. I love speaking to folks who understand and get crypto, and the fact that you are working in government, I think that's a huge plus, and we need more folks like you.
Well, thanks. I mean, the challenging part about the role I was in, and that a lot of regulators or officials are in, is that the responsibilities are so large and diverse that it really takes dedicated time and resources and energy to stay on top of innovation. And I made that a priority for me coming into this role. And I was fortunate enough to, have an outlet for that prioritization through sponsoring the Technology Advisory Committee at the CFTC. But I think everyone has to, make sure that they keep these things front and center within their attention and within their time allocation to make sure that we're not doing anything that overly harms this space just through a lack of understanding.
Sure. Let's start with your background. Where are you from? Where did you grow up?
Yeah, so I'm from Ohio. I'm from Columbus, Ohio, originally. I'm a Buckeye football fan. I didn't go to college at Ohio State, but I'm still a Buckeye football fan. Although I was born in Wisconsin, and my parents are from Wisconsin, and their families are from Wisconsin, so we kind of have a Badger and Buckeye rivalry, during football season. But I went to school down at Duke in North Carolina. I'm attracted to aesthetics, and they have a beautiful campus down there. They actually, at that point, had one of the only undergraduate public policy majors in the country. And so I went down there to study public policy, and because of the interest in that and the focus of policy in DC, quickly moved to DC right after college, and I've been here ever since.
And what did you do before working at the CFTC? What's your background?
Yeah, so after college, I started off on Capitol Hill, working for a member of Congress, Deborah Price, who was from Columbus, Ohio. So I got to keep my, my hometown experience and relationships very relevant in that policy work and that representation that she was offering. And she was a very long-serving member of the House. I think she was elected originally in '92. So she had been in the House for 10 years and then became the number 4 ranking member in the House of Representatives, which at that point made her the highest ranking woman in the history of Congress. And so I got to work with her both in her congressional representation role for her district, as well as in her leadership role as that number 4 ranking member. The dynamics of Capitol Hill changed, and I decided I wanted to career switch, and I was always fascinated by the markets. I was fascinated by policy changes that I thought the markets had completely missed from a valuation perspective. So I decided to, career switch and get an MBA, which I did here locally at Georgetown, and focus on finance and accounting and valuation. Transitioned from that to a job at a small investment firm that was focused on the banking sector during the financial crisis. So it was kind of, it was trial by fire during a fascinating period, fascinating from an investing perspective, obviously a very, very difficult, challenging, period for the country. But, learning how to evaluate, and evaluate the banks, read their balance sheets, their income statements, understand their accounting, and understand value or a lack thereof, was a great educational process for me, and something I think we had some success with. I ended up leaving that and forming my own investment firm. Wow. That was registered as a commodity pool operator. So it was registered with the CFTC because I wanted to trade S&P 500 E-mini futures contracts using a more technical momentum-based approach to investing that had a longer time horizon associated than more traditional technical strategies do, which are shorter term. Along the way, as I was forming that entity, I got a call from, Capitol Hill, some folks with whom I had used to work, and they said, we had very close relationships. We know who you are. We know what your policy views are. We know your philosophy. We've seen your career. There's a role opening up at the CFTC. Would you, no promises, but would you like to be considered? That was the beginning of a very long nomination process that took really 3.5 years. And then I ultimately was confirmed unanimously, which I'm very proud, to the agency in August of 2017, and just, stepped down last week for kind of 4 full years of service.
Wow. Well, thank you for your service. And, that's awesome that you have that financial investment background, and you went to the CFTC. Now you've left, and we got some big news that you're going to be working or advising, I believe, Andreessen Horowitz, a16z. Can you tell us about that?
Yeah, thanks. I'm really excited about the news that came out. It's my first week with them. I mean, to me, it's the best name in the venture capital space. Obviously, a wonderful track record at working with innovators and entrepreneurs in the crypto space and the DeFi space. Fantastic people. I'm just really excited about it. But if you think about their mindset and their philosophical approach, to allocating resources, they had the same view that I had when I was starting my investment firm. I took a very long-term approach to investing. I named my company Seculum Capital Management, which was it's an ancient Roman word that means a long life. It was a word that they used to describe kind of a cyclical renewing of a society or a civilization. And a16z is not focused on quarter to quarter, year to year. They're not focused on price targets. They are focused on being kind of a pioneering partner, with pioneering innovators, and ensuring that the true potential of innovation can be realized, regardless of a time horizon. And I think, to me, that is exactly the right approach for this space, and something with which I really wanted to align myself.
Yeah, that's so exciting. I mean, Andreessen Horowitz, they've made so many successful moves, and going back to Mark Andreessen's background in Netscape and just so many big moves in the tech space and now into crypto. So that's super exciting. How did that come about? Did they approach you, or how did the relationship come about?
Yes, yeah. So they've been filling out their advisory board. They have a number of former government officials, and I think there wasn't necessarily expertise on that advisory board that focused on the CFTC. I think the CFTC is going to play an important role in how regulation can evolve or be applied successfully, or possibly hopefully not unsuccessfully, but that's certainly a possibility going forward. And again, through an alignment of philosophies and values, it was a very easy conversation to have, and I'm just really excited about it. And the team's great, and I can't wait to be involved.
So I'm always curious about what folks' first encounter with crypto was, and what was their aha moment. So how did you first encounter cryptocurrencies? Maybe it's at this in your CFTC position at the time, and then what clicked for you was like, oh wait, this makes sense.
So I had been quote unquote exposed to it very early. When I was at the investment firm that focused on the banking sector, I was basically the only. It was just myself and the CEO. So, from a news flow perspective, I was constantly in front of a Bloomberg terminal absorbing, financial news on a real-time basis. I saw discussions of Bitcoin. I saw discussions of who was starting to get involved with Bitcoin. I, saw some awareness. I had some awareness of some of the big blowups that were happening. I saw a lot of the movement of prices, the appreciation, in value, and so I think I didn't really dabble, but I kind of kept it in the back of my mind going forward. And, while I had trained myself as a, as a fundamental, value investor in that role, and then transitioned to more of a technical investment, strategist. I could see fundamentals in Bitcoin that I didn't see anywhere else. And this isn't obviously just a Bitcoin discussion, because the space has evolved so much since then. But when the idea of something that could be instantaneously accessed on a global basis with limited supply, that was basically a digital representation of value. To me, those were that was a paradigm shift in how to think about people's access to storing value or creating wealth outside of the existing financial system, or outside of their own, country's approach to monetary policy. And as we move forward through time, I think my interest started to grow, along that path. And right when I got to the agency, the agency, the CFTC, had been charged with writing a lot of rules in response to the financial crisis. The Dodd-Frank Act gave the CFTC a lot of new authorities over the swaps market, to regulate the swaps market in a similar vein that that this agency had regulated the futures markets. And there were a lot of rules that were written, very quickly, very early. And I think, and a lot of my preparation for this role was to try to understand how well those rules had been written, what their, impacts on the market was, and whether or not they should be revisited and recalibrated. But within 3 months of coming into this role, Bitcoin futures get listed on CBOE and CME, and it puts the agency front and center in the conversation around crypto, and allowed me to really embrace, the exploratory aspect of this job by using the Technology Advisory Committee to bring in experts and have them give us and the public briefings on what they were doing and what they were seeing. And and then it was a little challenging, because we had some advisories come from our ethics groups about what we could invest in and I can't invest in. There are a lot of conflicts of interest. No one's allowed to work at the agency and invest in futures contracts, because that's a big conflict of interest. But everyone can own commodities, right? I mean, we all own cotton, we own clothing. You're allowed to own precious metals. You're allowed to own commodities. And to the extent that, we viewed, and I think we're correct in viewing, and have declared, Bitcoin and Ether to be commodities, there was some sense, well, we can own these if we want. But as the space was evolving, there were some, appearance issues, around that. And so, at first I kind of felt uncomfortable, around owning some of those things. As I got closer to the end of my tenure, there were some vehicles that I ended up using and could use to gain some exposure, there in limited circumstances. But, now that I'm kind of free and clear of that, I'm excited to get back to, a long-term, investment strategy in the crypto space.
So I have to ask, because the townspeople will come after me with pitchforks and torches if I don't ask you, which specific cryptos are you invested in?
Well, so, I just left the government, so it's, my holdings haven't changed. And, unfortunately, I think the only things on which there was enough regulatory clarity to not really raise, significant appearance issues, conflicts of interest issues, were Bitcoin and Ether. So, so those were the two, that I felt comfortable owning. And there were vehicles through which I could own them successfully from a financial disclosure perspective. I think moving forward, I'm also in the position of having served for 4 years in government, and it was a fantastic experience, but it wasn't necessarily, a time period of my life where I was accumulating, wealth or financial resources. And so hopefully, down the road, with an opportunity to do that, there'll be a lot more that I'm considering. But the growth in the space is fantastic. I haven't necessarily seen or researched, any large scale token that's seen appreciation that I haven't liked. The innovation and growth and wealth creation and entrepreneurship in the space, to me, it's invigorating and all of it's appealing.
So on that note, let's talk about U.S. crypto regulations, because I think we all agree that if there's scammers and there's scams, we need to go after them and shut them down. But we don't want to kill innovation. We don't want to throw the baby out with the bathwater. What is your take on the current state of U.S. crypto regulations? Because there seems to be some lack of movement, some backtracking, some confusion between the CFTC and the SEC. And I want to get your take, given that you worked as a commissioner at the CFTC, and how do you feel about this situation?
Yeah, so I think there's an overarching lack of clarity. And I think initially that was pretty much within the jurisdiction of the SEC to identify potential tokens that they viewed as securities, or create a framework through which tokens could achieve decentralization and not be recognized as securities. Unfortunately, in my view, neither of those opportunities to provide, productive, positive clarity were taken advantage of. And so the CFTC also looks at facts and circumstances on a constant basis and makes individual evaluations on, any product, but there was so much innovation and growth and value creation occurring in this space. To me, it didn't take a lot of foresight to think this is a space that we should provide some clarity around, to allow innovation to continue to grow, to allow wealth to continue to be created, while also preserving, some level of, accountability and regulatory responsibility, if things don't achieve true decentralization, or people get, really taken advantage of in certain circumstances. And so, initially, I viewed that lack of clarity as, both unfortunate from not being able to be provided in a, in a more positive way, but you also have to be careful what you wish for, because, you can get clarity, but that clarity may not be what you want, and so, some of that lack of clarity, could have, been instrumental in allowing a lot of these, projects to get off the ground and decentralize to a point where, they may not be, securities. They may be pure, commodities at this point. And I think that there are some strong arguments around that. But I think as the DeFi space has evolved, now there feels like there's a little bit of maybe a lack of clarity, but also a lack of clarity of how the agency how the CFTC will deal with some of the things that we see in the DeFi space. And, the way I kind of think about it is, you don't really find people that are anti-innovation. You don't really find, people in government, in Congress, in a regulatory capacity. And you also don't find people that just blatantly, don't care about the law. Right. So I think anyone in this kind of role cares about both. But to me, the philosophical distinctions are, where do you, what side do you err on? Do you err on the side of rigidly applying the law, from a fair competition perspective, or do you err on the side of innovation and, see where, a new potential paradigm shift is going, to understand when, how, or if, you as a regulator should be involved. And I think I tried to err on that side. I tried to create a counterbalance to some voices that were advocating the other side, but I understand that advocacy. I mean, I think, again, it's a part of the role. effectively execute the law. I don't think we want people in any of these roles that don't care about the law, because then they're just making their own value judgments and become, unaccountable legislators.
Right.
And I think that's very irresponsible. So there has to be, some balance there. But I felt, a strong voice was needed on the pro-innovation, do no harm perspective to possibly, counter some of the things that we may be hearing from others.
So I noticed that both you and Chris Giancarlo, former CFTC chair, you both tweeted not in agreement with the recent comments from SEC chair Gary Gensler. In my opinion, what seems to be an overreach, trying to get more power to regulate the crypto markets. But you mentioned balance. There has to be a balance because the CFTC plays a role. So what is your concern there? And maybe you can go into the details as to what you see the SEC trying to do, and how do we make sure things are balanced?
Well, see, I think the first issue is that, broadly speaking, I don't see a lot of voices in the crypto space raising their hands and saying, yes, please regulate us. Or even more extreme, yes, we need your protection. We as individual investors or purchasers, need your protection. And I think that's a very valuable thing because it's fostered and perpetuated, an individual responsibility perspective that I think has been somewhat inherent in the crypto community since the initiation, of this space. And I think the further we get away from that, the more damage is going to be done by potential government overreaching and regulatory reactions, as opposed to the damage that could be done by incentivizing and encouraging people to take individual responsibility for their own actions. And that also aligns, I think, more with my political philosophy generally. But what I don't think we need is anyone within, the regulatory community or in roles like mine to say, hey, you need my help, and I don't care what damage it's going to cause. Here's a new regulatory framework that's going to be my legacy going forward. Certainly the CFTC should be involved in any conversation if Congress wants to write a new law that captures some part of the crypto space. There's been some discussions around, crypto trading venues, exchanges, and I can understand why some may feel that could be good, it could be, positive, but there is such a thing as regulatory economies of scale. Okay. Regulation, the size and scope and cost of regulation in the financial space creates moats around businesses, and it creates a lack of competition because of how severe the regulatory landscape is from a compliance perspective, a legal perspective, a cost perspective. And so I think we need to, understand that the reason that some of these, companies and centralized entities were able to create such value and grow so quickly was because, there was a strong competitive marketplace that allowed that innovation, to occur with relatively lower costs than what would be seen in the traditional financial space. And if we want to really preserve, that aspect of competition, we need to be careful about creating regulatory moats around businesses. So, I think it's going to be a challenging public policy question for Congress to answer. I hope it is a very balanced discussion. And if Congress decides to bring in, some environment into the regulated community, I think there's a very valid conversation about which regulator is the right, the right agency to do that. The CFTC has a strong focus on underlying commodity markets. We have anti-fraud and anti-manipulation authority over transactions in the spot commodity markets, in the exchange of cash for physical goods, or non-physical goods, because commodities can be non-physical as well. We obviously have full regulatory oversight of and enforcement powers over the commodity derivatives landscape. And just because someone somewhere thinks that something might be a security doesn't mean that wherever that has traded or whoever actually owns that at any given point now all of a sudden needs to be roped into securities regulation. So again, I think that there needs to be a balance in this conversation moving forward. And I did not see that in any capacity. I viewed it as a direct political power grab in terms of the conversation that was articulated around, who needs this, why, and who should get it.
Now, there are a few folks in Congress like Tom Emmer, Warren Davidson, Darren Soto, and so forth, who have put together some bills. One, Token Taxonomy Act. Tom Emmer did the Securities Clarity Act. I don't know if you have a sense of which one might be ideal, or whichever one gets approved would at least move us further along. Any thoughts on that and what potential bills might work?
So I think you have those bills. You have a bill by Congressman Patrick McHenry, the ranking member of the House Financial Services Committee, around creating a working group between the CFTC and the SEC on the status of some of the top digital assets, crypto assets, with the opportunity for public feedback. You have a bill that was introduced in the last Congress in the House Agriculture Committee that created a voluntary registration regime for crypto exchanges with the CFTC, but then as an incentive to for that voluntary registration, I think had a process to deem tokens that were traded on those exchanges as non-securities. I think one of the overarching issues in all of these pieces of legislation is a blatant outright frustration of the lack of positive, productive clarity in a space that has seen tremendous wealth creation, tremendous value, tremendous innovation. And again, I want to balance saying that with acknowledging that the CFTC, while I was there, always looked at facts and circumstances of an individual product. But we're at a point where this space has, I think, created such meaningful wealth and innovation, and is going to continue to grow, and in my view is absolutely the future, that it's irresponsible to try to pick one-offs and either force settlements or classify an entire space through one potentially adversarial court outcome. Yep. So I think clarity is needed. I think some members of Congress see, recognize the frustration that has created and want to try to solve that problem. I don't necessarily know, which one of those is the best approach, but I think something needs to happen.
Now, there's
and it doesn't, and Tony, I'm sorry to interrupt. It doesn't necessarily have to be legislation. I mean, there is some flexibility that the regulators have to be able to do this on their own. As I know, you've talked to SEC Commissioner Peirce, a great former colleague of mine and a close friend. I mean, her safe harbor proposal, I think, is a brilliant way to understand the flexibilities that exist and create a process where you aren't necessarily disadvantaging, investor protection by allowing, something to come to the market and achieve decentralization that can then, realize a transition away from, a security into a commodity that allows for this, innovation to continue. One of the things that I've been very struck by is that if securities laws applied to any of these, crypto asset issuances up front, I don't think you would have seen the value that's been created. Yeah. I think you would have actually outright precluded the value that has been created. You would have precluded $2 trillion of wealth creation in the name of, quote, investor protection. And I think that needs to be front and center in any conversation, around, what the costs and benefits are of allowing, these crypto assets to continue to exist in a non-security regulatory framework, versus anything that potentially could be sacrificed, in the name of someone's view of customer protection or investor protection. So, again, a more balanced discussion of the trade-offs, I think, is also very appropriate.
Yeah, absolutely. And I remember you tweeted something about, this being a new frontier. And I feel like we need to go back to the drawing board here, not necessarily come at it right away, guns out, like, okay, this is our law and you must apply it to and fit it a round peg into a square hole. Because there's just certain concepts, like I invested in stocks. When I invest in crypto, I'm not expecting dividends or the same type of dynamic. And I feel like certain regulators are thinking that way. Well, they're treating it like a stock, but it's not. It's just very different.
Well, so I think, I am not a securities expert. And I need to say that up front. I think I think there are a lot of people that probably know that and are frustrated that I'm speaking about it. But, I've been exposed to this space for a long time and share a lot of frustrations that I think just are, generally exist. Let me just say up front that I'm not a securities law expert. I'm not a lawyer. As I went through my background, I was in public policy. I went into financial markets. I have, capital market expertise and not legal expertise. And there are probably a lot of people out there that are frustrated that I'm speaking on these topics without having legal expertise on them. But I think I share a lot of the frustrations that exist in the space. But you're absolutely right. There are things that don't exist, in this environment now, in the crypto environment, in the DeFi environment, that were the basis for, investor protection regimes. Management teams and asymmetric information between the managers of, funds or firms, and the lack of that information from investors is what, investor protection mandates and regimes were designed to close the gap of. Because you had, centralized management of someone else's resources. Now you have protocols whose code is, completely open, transparent, and public, that isn't necessarily tied to, an ongoing entity, or company. In some circumstances, the governance has been completely decentralized. So you have to ask yourself, if you're going to try to apply, regulatory framework to a DeFi protocol, who fills out the paperwork?
Yeah.
It's so, I mean, some basic questions around how what exists now is not like, what existed before that was the underpinning rationale for investor protection, and securities registration and regulation, and even, activity in the derivatives markets. We have part of our law of the CEA, the Commodity Exchange Act, which is the governing law of the CFTC, says that, futures contracts have to be traded on registered exchanges and cleared through a clearinghouse. Okay, well, that evolved because of, the use of leverage in derivatives transactions, which was a necessary component of that form of risk management, and trying to promote the integrity of a transaction by diversifying the risk across all market participants, as opposed to potentially having one exposed to someone else, someone's exposed to someone else's bankruptcy. And then immediately, negating all the risk management utility for that one person. That if you could aggregate that and diversify that risk, you could make the system itself more resilient to any bankruptcy and provide more integrity to any transaction, and therefore enhance, risk transfer and hedging activity. But there's plenty of, there are plenty of aspects of DeFi that don't fit that mold, and that don't necessarily need the same form, of regulation because of how it evolved versus how the traditional commodity derivatives markets evolved. So that's why I think we need to just take a step back and say, from a first principles perspective, does this space, need our protection and need our rules? Or does it need some protection and some rules? If so, why? But if so, then, what are they? And how can they best fit, the space so that the regulations themselves don't create harm, either to customers, investors, owners, businesses, but even philosophically to, innovation, transparency, and competition, and let that process, evolve in a, public and a transparent way, so there can be feedback on it. I mean, Commissioner Peirce, I think posted her safe harbor on GitHub.
Yep.
That was a feedback mechanism, and I know she valued the feedback that she received, on her first version, and took a lot of comments and put thought into evolving it into a second version. We have a feedback process in the regulatory system that's governed by the Administrative Procedures Act, the APA, that says we have to solicit public comment, but doesn't necessarily mean that you have to abide by the public comment. Doesn't mean that you have to embrace any comment or any perspective. Right. So I think taking a more patient approach to this helps to ensure that anything that does develop, is productive as opposed to counterproductive.
Yeah, and I think we're seeing to that point that the investment world is changing a bit, where because of the decentralized nature of the internet, where people are able to crowdsource, openly come together, conversate, share data, and in crypto, so analogous of that, you kind of need to crowdsource the people now, versus before it was like, okay, we think this is the right way. I think, to your point, you need to open it to that dialogue. Everybody's on Twitter sharing their perspective and their comments, and I think the world's changing and moving that direction.
Yeah, and I think it's a, in my view, and the crypto community is obviously large, very diverse. It's probably insulting to classify it as one group. But, I do see, an incredible amount of access to information and responsiveness to information. Yeah. By the community. And maybe it's because of how fast innovation is moving and how much opportunity exists, that the players in that community need to keep on top of developments and news and create positive feedback loops, to continue to evolve. But this is a great community to, I think, advocate, take advantage of the public platforms where they have a voice, and advocate, hopefully around, eventually around a specific, outcome or goal, and hopefully nothing really gets in the way of that in terms of, some big blow up or disaster, by a centralized entity that then, allows politicians or regulators to paint the entire, space with, the same broad brush of fraud or corruption or lack of, investor protection.
So what do you think about the infrastructure bill? Obviously, there were some things snuck in there that tries to target a DeFi a bit, and seems impossible to track or police Do you think that's going to get kicked out? I'm hoping it does before the bill becomes law. What are your thoughts on that?
So having served in Congress, as a policy aide, and I don't think any member of Congress would necessarily argue with this. Certainly take it personally for me to say that I don't like the way that some of this some legislation is put together. It can be put together behind closed doors, with very few decision makers, with language that has not been vetted or publicly aired at the last minute, without really a meaningful opportunity to change once it does become public. And it's very difficult to use the regular order process, regular order meaning the traditional order or the traditional process for developing legislation, the regular order process to pass a bill into law. So, I do understand, why some of this process has evolved the way it does. But when you're talking about, hundreds of billions of dollars, if not trillions of dollars of spending that then needs to be paid for through, taxes so that it can be budget neutral, I don't think that's something that benefits from opacity. And unfortunately, I think we saw the negative results of that process in the provision around, crypto and, potential peer-to-peer transactions, or who was responsible for reporting, customer information and to whom it applied. And that provision was added as a revenue provision. It was added as a revenue provision to raise supposedly around $28 billion, I think over 10 years, to help pay for, some of the components of, what was deemed as being infrastructure related, which then made it very hard to change, because if you were going to limit, to whom that provision applied, you'd probably have a revenue impact to that. And if you narrowed the revenue impact, all of a sudden you don't have a budget neutral bill anymore, to which I think either some members of Congress would have objected or a different process may have applied. And so, I was disappointed by the process. I was disappointed by the language, but I was also encouraged at seeing such tremendous focus and advocacy by the crypto community, and the unification that occurred that basically stopped, a priority of the administration and the leaders in the House and the Senate, stopped them in their tracks for 3 days to solely debate this issue.
Yeah.
And raise the awareness that if you're going to target this space in a process that's not transparent, you better be ready for blowback and potential embarrassment. And if there's something that I've learned, and something that I, individually appreciated in my former role, is that the thing that, public officials fear most is embarrassment. And that can be a very effective strategy moving forward.
And especially as we were talking about, like, the decentralized nature of the internet, everybody has a voice now, and they can come together, and that can be really bad for you, right? That you start trending, people put up blog posts about you, videos. It's a new world.
Yeah, but so it is, and I think that's to this community's tremendous benefit, to take advantage of. But I don't think the last chapter has necessarily been written. If there is continued advocacy around this issue, there is always the possibility for a small, skinny bill that has technical fixes to be passed. Again, it gets tricky when you talk about a revenue neutral initial bill and then changing some revenue provisions and how that works. That gets a little bit beyond technical fixes. But then it also goes to the Treasury Department to try to write rules around. And, I don't know how they're going to, approach this. But this issue is obviously raised in profile very visibly, that, no one's going to be able to sneak something past anybody, on this going forward. That doesn't mean that that Treasury or anyone else won't take a negative view or won't do something overly broad. But they know that there's a big group of people that are focused on this and are willing to be vocal about it. And I think that's important.
We kind of touched on this indirectly, going on with the SEC and crypto regulations. There's a big lawsuit against Ripple over XRP. All eyes in the crypto community are on this because the outcome could determine how the rest of the market is regulated and how things move forward. But, as we talked about, Congress may need to step in here. What are your thoughts on this whole situation and what's going on?
So I'm going to preface this by kind of reiterating that even when I was at the CFTC, we did take a facts and circumstances approach to how we viewed non-compliance with regulation. Okay, so just I want to say that as a caveat. But my direct response to you is that I absolutely despise regulation through enforcement. And what do I mean by that? To me, enforcement is a necessary component of any regulatory agency, because otherwise, if you don't have enforcement powers, no one has any incentive to abide by the regulations. Yeah. So, enforcement has to go, hand in hand with regulatory, authority. So it's not just the case that, any enforcement action, is policy setting or is regulation by another name. So what is regulation through enforcement? To me, it is bringing a case or trying to strong arm a settlement that resolves a very tenuous, ambiguous policy issue that should have been resolved through open dialogue, guidance, or potentially rulemaking, or Congress, for that matter. I think we've gone very far down the path of having agencies in the regulatory state make way too many rules that could be way outside of the bounds of policy decisions that rest in Article 1 in the Constitution with Congress. And so I think that there could be some very valid, constitutional challenges if any agency really goes too far. And I've actually suggested a potential constitutional challenge to something I saw at the CFTC. So, it's not necessarily out of bounds. So, I think that there are big open questions in this case that, deserve discussion, deserve possible guidance, that bringing a case, to me directly conflicts with some of the things that the SEC had been doing or some people at the agency had been saying. And one of the things that I noticed is that I think through the court case, it was revealed that the SEC's, ethics office, we talked about how, at the CFTC, I wasn't allowed to buy derivatives. I couldn't buy futures contracts, but I could own, commodities. Mm-hmm. There wasn't a prohibition on that, but there was, it did raise a level of some visibility concerns, kind of the press test. How does it look in the press? If I, were to really go, headfirst into all kinds of, crypto assets. To me, it speaks volumes that I think through this case, through discovery or through a court's, judgment, it was revealed that the SEC's ethics office did not have a prohibition on their staff from buying and owning Ripple. Hmm. That in and of itself is a conflict between how someone within the agency in a position of importance viewed this. So, to me, I think I think it's a landmark case. It has very broad implications. I would hate to see it be settled. I think it needs to be resolved through a judicial opinion. And if that judicial opinion ultimately sides with the SEC, then that's the judicial process. Then a judge has agreed that analysis was correct and did abide. I think there may be an opportunity for an appeal for that, but I don't know. But I think ultimately, this case is too important to the landscape and the application, in my view, in a way that has looked inconsistent, to the law, to be resolved any other way.
So I want to switch gears and talk quickly on a couple more topics, and that is Bitcoin made legal tender this week in El Salvador. We see companies putting Bitcoin in their balance sheet. It's amazing to see how things have taken off and grown. What are your thoughts on that? And do you see the trend? Two-part question. Do you see the trend of companies adding Bitcoin to their balance sheet continuing, and maybe other countries following El Salvador's move?
Yeah, thanks. So fairly early on in my tenure, I gave a few speeches around Bitcoin. I think two of them were in Europe. One of them was it was very directed at, in my view, regulators or public officials in Europe and in the United States looking down their noses at Bitcoin, from what I saw as the perspective of a reserve currency status, from the perspective of the dollar or the euro, and saying, oh, it's not a store of value. Oh, it's too volatile. Oh, it's a fraud. There's nothing backing it. Just a bunch of value judgments.
Yeah.
And my point was trying to remind anybody that, hey, you can have your own value judgments, but don't think that 95% of the world agrees with you, because they don't. They're viewing this through their own lens of their own local economies, their own opportunities, their own imprisonment from their monetary policy schemes. And I think that has come full circle with El Salvador wanting to do this. And I think, to the extent that individuals want access to Bitcoin, Ether, Ripple, some token from a value perspective, is a little bit of an indictment on either the trajectory of monetary policy in their country, or perhaps the politicization of monetary policy in their country, and they want more control over that individually. And if there is a government that recognizes that may be a problem, or they want more predictability, or they want completely out of that responsibility, doing this makes a lot of sense. But to me, it just goes to show, again, how important this innovation has been and will continue to be to the entire world population, and the brand that has been created around disintermediating, anyone's individual ties to their government's tax policy or monetary policy.
What do you think about NFTs, and are you planning to potentially buy any?
Well, so I got to get back to kind of the accumulating resources, part of the discussion we talked about before. I think they're fascinating. I mean, I think, I view NFTs as kind of what they are now versus what they're going to be, or what they're going to unlock. And NFTs right now, to me, feel very, are artistic based.
Yeah.
And I think that's fine. I mean, if aliens came down and, went into some billionaire's home and saw a Picasso, I'm not sure they would say, oh my gosh, that's amazing artwork.
Sure.
But we as a society have identified genius in it, and beauty in it, and value in it. And again, I'm not going to put my value judgments on someone else's opinions.
Sure.
I'm just going to understand, what I view as interesting. And I think some of these things are. So, we'll see. I mean, possibly I'll go down that path. But I think the fascinating area to explore is how, NFTs and smart contracts can link to change the retail customers' experience with digitized intellectual property.
Mm.
And right now, if there's intellectual property that's digitized, it can't be resold because it's a copyright issue, and that happens because I, as the original purchaser, receive all of the benefit of that resale to someone who is buying it from me, as opposed to buying it from the person who created the intellectual property. And therefore, it is contained within these, ecosystems, environments, walled gardens, where it can't leave, that platform, and it can't be traded. But there could be a process going down the road where, the creator of that digital intellectual property ends up becoming its distributor and allows for it to be, resold because they can receive royalties from that resale. It's kind of like, in the old days when you have to wait 3 months to go rent a movie, right? But you could do it really cheaply, as opposed to going to the theater to buy the tickets. There's kind of that value perspective. So, I mean, I think, being able to, assign as an NFT, something that is digital intellectual property, through smart contracts. I think there's just so much that's going to happen with that. I'm not smart enough to know how to do it, if it's already being done, how we get there, how long it's going to take. But I think it's kind of fascinating to think about.
Yeah, absolutely. Final question here before we get to our rapid fire items. What do you think about CBDCs? And obviously, the US is looking at the digital dollar. Every central bank around the world is building their CBDCs. Do you see benefits to it? And one of the things I spoke to Chris Giancarlo about when he was supporting the digital dollar project is, how does this align with our constitution and right to privacy and things like that? What are your thoughts overall?
So Chris Giancarlo was a fantastic chair of our agency. He is a mentor and is a very close friend, and I think the world of Chris. And I am thrilled, that he is involved in the discussion of a central bank digital currency, because I think that debate needs his voice.
Yeah.
Because I think the answer to your question is it depends. The beneficialness of a central bank digital currency is going to depend on how it is used by the government for surveillance purposes or policy outcomes, or both. And, in my view, it is not worth having the discussion of a central bank digital currency if you cannot guarantee some level of privacy.
Right.
This doesn't necessarily align with Chris's view, but I think that's okay. Randy Quarles, who's the vice chair of the Federal Reserve, who is stepping down soon, who may have stepped down already, gave a fascinating speech recently where he was advocating why dollar-backed stablecoins could be just as, if not much more significant to the reserve status of the US dollar than a central bank digital currency, because they already exist. They're widely used. And if we don't harm them through a regulatory approach, they could do more through their uses in innovation now to ensure consistent demand and broad demand for dollars. And I thought that was a very important part of the conversation around stablecoins.
Yeah.
And I thought it was a very good, strong link between, the idea of how reserve status of the dollar may evolve. I think it's very secure, but how it may evolve, and what the right role is for technology and innovation to play. I don't necessarily think, and I may think this because of ignorance, but I don't necessarily think that we have to compete with China on something that they are really using for surveillance purposes.
Yeah.
I think they have different goals. And I think the way that a central bank, a digital yuan advantages the Chinese surveillance state almost precludes it from furthering itself as a reserve currency. And they may recognize that, and they may not, they may be okay with that, or maybe I'm wrong. Maybe I'm wrong about what their intentions are, or what the results are going to be, or whether or not we should be worried about it. But to me, I think it's important to look at what innovation currently exists, why it's being used so widely, and whether or not that in and of itself is something that should be embraced, for the same policy purposes, and possibly with or maybe not with, more privacy protections.
All right. So final set of questions. They're rapid fire.
Okay.
As what is your favorite food?
Do I have to pick one answer for these questions? Okay. So I'm not gonna. I have like highbrow, lowbrow, like expensive steak or cheap pizza.
Oh, I'm the same way too. Favorite musician or band?
I mean, again, it was like, AC/DC, Back in Black, a long time ago. It was Coldplay, U2 probably, and then Coldplay, and now probably more like Avicii.
And favorite movie?
Anything by Christopher Nolan.
Awesome. And favorite book?
A book that I've continued to think about a lot is called Born to Run, because it actually advocates that we evolved as a species, not as kind of a gathering, walking species, but actually as a running and hunting species, which has a fascinating story about a journalist tracking down a hidden native tribe in Mexico that regularly did for fun 50 to 100 mile long races in the desert. And I mean, it's a very cool story. I read it a long time ago. It's probably not the most intellectual book, but I mean, there was a lot of there that I didn't know and hadn't thought about, and it changed how I actually my form and approach to running.
I will definitely have to check that one out. And finally, when you're not, now at Andreessen Horowitz in your advisor role, what are you doing for fun as a hobby?
Well, I mentioned running. I mean, anything outside, biking, running, walking, hiking, skiing, sailing, golfing, fishing, some kind of activity, enjoying the outdoors, getting sun, being with friends. I think, being outdoors and enjoying yourself is a gift of life.
Absolutely. Well, Brian, pleasure chatting with you. Thank you so much. Thank you for everything you're doing. I appreciate you being a leader in the crypto space, and looking forward to hearing more from your role at Andreessen Horowitz as things progress.
Thanks a lot, Tony. Thanks for inviting me to be on, and looking forward to hearing feedback from your community.